Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Tuesday, July 22nd. Well, firstly to the S&P 500, and here we see a white body candle following two inside days in bar chart terms, raising doubt about the continuation of the trend to the downside or the upside. And here today we've seen establishment of a higher high and a higher low on a white body candle, with the buyers taking control of the market once again, finding some upside momentum and establishing a new major high at 1986. There was some price rejection as we tested just up above the previous high, so there does remain some doubt about whether the market will be able to close up above that level. We've failed to close above there, but if we look at the trading over the last couple of weeks, we have formed something of a congestion area. But the important thing here is that the market is still trading up above each of the Ichimoku indicators. The Cloud, the Kijun-sen, the Tenkan-sen, and the Chikou span are supporting that bullish activity in that longer term time frame, and all three times for a matter of fact. Now, if we look at the Fibonacci the Fibonacci projection tool, and we're examining the relationship of this first time frame uptrend to the previous time the market was trending up, and here we see the market trading exactly to the 100% level, and we're seeing some rejection from there. So a little bit of a hint that there is some doubt about whether the market can carry on through that 100% level. Having said that, however, the buyers are still strong in this market. They've regained control of the market, and they've built some upside momentum, so it's more likely that the market will be able to trade through that 100% level. But what we need to do is watch how the market reacts around here. Now, just looking at this pattern that the market's developed over the past couple of weeks, and we know that we're congesting, and within that pattern we've established pretty much equal peaks within the pattern, but we've made higher troughs, and that's suggesting that the buyers are accepting higher levels within the congestion area and suggesting that the breakout will be to the upside. Now, this is pretty much an ascending triangle, and they tend to be continuation patterns in this configuration. So we will be looking for a close up above the upper barrier, which is around the highs, and a close up above 1986 would give confirmation of that pattern. The projected target would be the width of the pattern from this point here, but we'll wait until, if we do see that breakout, we'll wait until we measure that. It can also be a reversal pattern, so we're looking for a close down below the lower barrier, but in line with the market being bullish in all three timeframes, and in particular trading above the cloud, with the impetus for the market being to the upside, it's more likely that the breakout and the close will be above the upper barrier. What we want to see is a bullish close as well if the breakout is to the upside, or a bearish close if the breakout is to the downside, and that will give us more confidence in the breakout and for the potential for the market to reach its target. Now, just looking at the one standard deviation Bollinger Bands that I like to use, and I've mentioned these quite a few times, and here we have the market squeezing up to a degree, not a significant squeeze as we've seen down around this level, but certainly the market has lost volatility, and that's what you expect when markets congest, and markets move between low volatility to high volatility situations, and those high volatility situations tend to manifest themselves as trending action following congestion. So what we're looking for here is continuation of the breakout. We've had a breakout up above the upper one standard deviation band. The Bollinger Bands are just a signal of strength, and when I see strong breakouts above or below the bands and some follow through, the market tends to go on with the move. And here we've seen the breakout, a fairly bullish close, and I'm looking for a continuation of the trend to the upside. Now, within the bands we can find the either the top of the band, the middle band, or the bottom of the band holds as support, and that's what we saw in the recent past here, so holding as support there. What we don't want is the market trading down through the bottom band, and that would signify a change of sentiment and a change of strength in this market to the downside.